Is there anybody there? Hello, Ryan? Anybody? Oh, I can see Ryan. He's listening. Oh, this is all going terribly wrong. Invite, send. I never thought I'd be reliant on Ryan to bail me out. It's normally the other way around.
This has made my day.
Oh, here he is, finally. Oh,
Sorry. Firstly, I
I've never been
apologise to
more
everyone.
pleased to hear your voice.
Sorry, I apologise to everyone. For some reason, it was letting me start the spaces, but then it wasn't literally doing anything else. I blame Croatian 5G or whatever. But honestly, all worth it to see you going, hello, hello.
Well, as you may have figured out, I've never done this before. It's quite miraculous that I actually managed to set the
Oh,
damn thing up in the
oh,
first place.
my friend, in that case, you've done phenomenally well because it took like mere seconds. But yeah, apologies for that, everyone. If you haven't already guessed, it's the morning blast. It's completely, as we say, it's bar side rather than fireside because we sound like we're when it does carry on like we're normally drunk. But you
Certainly a
join
carry on this morning.
quite. You join me from a very, very blistering hot Croatia. Michael from a blisteringly hot London. It is the morning blast, as you all know by now. I'll get the legals out of the way. Firstly, hats off to my dear friend Michael for hosting today's show. And nothing discussed on this space is session constitute trading or investment advice, yada, yada, yada. Nothing to do with this is about trading, yada, yada, yada. Anything said by myself, Michael Brown, PIQ, take with a pinch of salt. Don't trade on the back of it, yada, yada, yada. Over to you, my dear friend, Mr. Michael Brown. Oh, also, if anyone was wondering, yes, I did make it to Croatia.
Well, we know you did because we saw that picture of you on the aeroplane.
Um, I was going to keep this a secret, but we did get on the wrong train at Farringdon, and we
Oh
didn't
dear.
realise until we got to Stevenage, and then we realised. And Angie will be. I can see Angie. Morning, Angie. Angie will be laughing her tits off at this because I told her. When I told her, I was like, please don't tell anyone. But I thought it's going to come out eventually. I'll probably tell you drunkenly in the pub, so I might as well get it out in the open and
Oh,
own it.
I can only imagine the panic.
Oh my God. Yeah, well, you do know because you know me, but to anyone else that doesn't know me as well as Michael, yes, it was sheer fear.
Oh, dearie me. Right. Well, on that note, let's crack
Let's crack on.
on. With rather late this morning, but apologies once again for that.
Apologies.
In terms of markets, it was a very sluggish start to the week yesterday, to be completely honest with you. We ended last week on well, a pretty subdued note, and we really started the new trading week on a similarly subdued note as well. Some very modest downside in the equity complex, the S&P 500 closing down by around 0.2% yesterday. Treasuries remaining in a relatively tight range, and the same can be said for the FX complex as well, with the dollar marginally firmer and the dollar index reclaiming its 50-day moving average, but fundamentally recent ranges being respected very, very well indeed. That said, there were plenty of catalysts for participants to get their teeth into yesterday, primarily on the trade front, where it looks like it is taco time once again. Exhibit A on that front, President Trump extending the tariff truce with China for a further 90 days. We got news of this during the towards the back end of the cash trading session yesterday, and then President Trump confirmed that via a Truth Social post overnight. Of course, this is very much in line with expectations. I think every man and his dog was expecting the can to be kicked down the road on this one. The new deadline is now Sunday, the 9th of November. Pencil that in your diaries, but be prepared to rub that out very shortly because I think that will get extended as well.
Sorry. Well, did you just encourage our listeners to rub one out?
No, I did not. Don't get your
Okay.
mind out the gutter.
So,
Just for those who are interested, there are only 14 more 90-day extensions to go until the end of President Trump's term. So get
oh,
used to
do you
these
know what?
headlines.
Do you know what? That is my favourite stat of all time. Well played.
Exhibit B on the taco front is this business with gold. Of course, you'll recall late Thursday last week, if not Friday morning, there were reports that gold bullion, certain types of gold bullion bars being imported into the United States would be subject to reciprocal tariffs. That, of course, sent futures to record highs, actually, and the spread of futures over spot massively blew out effectively. It all just became big old storage play. Trump yesterday pulling a big old U-turn on that, posting on Truth, and I quote, "Gold will not be tariffed." There was no more explanation than that, but I think, frankly, no more explanation is really necessary. Sticking with the United States, but moving away from the issue of trade onto the issue of who is going to become Fed chair. To be honest, I'm feeling a bit left out because we're now at the stage of the Fed chair race where every single person who has ever been even tenuously connected with markets is being named in an article as potentially being under consideration for the role. Bloomberg sources yesterday noted that in addition to the names that we're familiar with, Kevin Warsh, Kevin Hassett, Chris Waller, etc., they also noted that other officials under consideration include Fed Vice Chair for Supervision Michelle Bowman, Fed Vice Chair Philip Jefferson, and also Dallas Fed President Lori Logan. This following Wall Street Journal reports over the weekend that the short list, or perhaps long list, of candidates who could become Fed chair is now up to as many as 10 people, although these Bloomberg sources reiterating that the White House are still on track to announce the next Fed chair this autumn. I believe, although I may be wrong on this one, when Powell was announced as Fed chair, that announcement was made sort of mid-October. So if anyone is looking for a potential parallel, that is the sort of timing I would be looking at. Also, sticking in Washington, D.C., of course, you'll recall in the aftermath of the July jobs report that we had about a fortnight ago now, President Trump decided to fire the commissioner at the Bureau of Labor Statistics, ostensibly due to data quality issues, but probably because it was data that he didn't like the look of. He announced yesterday that he has tapped someone called E.J. Antoni to replace them at the BLS. This chap is currently chief economist at the Heritage Foundation. The Heritage Foundation are a very right-wing think tank in the United States. Stephen Moore runs the Heritage Foundation, which kind of tells you all you need to know about that one. He looks like a sort of budget magician that you'd find at a bit of a shit wedding, to be completely honest with you, without wanting to get too personal.
The kind of guy that does children's parties, but you really wish you wouldn't.
Yeah, you're probably about right with that one. Safe to say he has been a long-time critic of the Bureau of Labor Statistics. Just go and have a quick gander at his Twitter feed. That will tell you all you need to know. His nomination does require confirmation in the Senate. So that means that given that the Senate is on recess at the moment and they'll probably want to deal with the Fed board nomination of Steve Moran first, this chap is not going to get his hands, well, certainly not going to get his hands on today's inflation figures, the CPI numbers. He's also very unlikely to get his hands on the August jobs report as well. In terms of other bits and bobs from yesterday, a little bit of news in the tech/semiconductor space. Micron, they unexpectedly upgraded their fourth quarter guidance yesterday on improved DRAM pricing, whatever the hell that is. They now see adjusted revenues in the fourth quarter between 11.1 and 11.3 billion. That's up from a prior 10.4 to 11 billion. They also raised their profit guidance as well, and their shares were up by about 5 or 6% on that upgrade yesterday. Sticking with semiconductors, news out this morning, China have issued some new guidance urging firms in the country not to use NVIDIA's H20 chips. This is very much in keeping with reports that we had over the weekend and that I think we covered on the Morning Blast yesterday, although it does, of course, follow the Trump administration's plans to get NVIDIA and AMD to send 15% of their revenue from China sales to the administration.
Just on this, I do get the impression that China are just playing silly buggers because they know that Trump's worked his arse off to get this deal, to get the 15% revenue on exports to China. And then China are going, do you know what? He's probably been pulling his hair out over this. Why don't we really make it funny? And say we're not going to use them anyway.
Yeah, absolutely. Sorry, correction on my part from Tom. Tom Talks Cars. I've just been told that it's DRAM, and I quote here, "It's not fucking whiskey." So thank you for that, Thomas. I will remember that for next time. Moving on away from well, yeah, quite. Well, we didn't expect anything else. Moving away from semiconductors into the auto space, Ford. They're going to invest $5 billion in electric vehicle investment with a focus on low-cost models. They're going to be manufacturing an electric vehicle pickup truck, which will cost 30 grand, starting in 2027. I'm sure folk in the States can't wait to be buying that one. Sticking with autos, General Motors, they're planning a hiring push in order to develop a driverless vehicle. So good luck to them. In terms of other bits and bobs on the data front, overnight/this morning, we had a policy decision from the Reserve Bank of Australia, the RBA delivering a 25 basis point cut in line with expectations, lowering rates to 3.6% in their guidance, noting that they will be attentive to incoming data and the assessment of risks, which is a lot of words that says nothing at all. We also had the latest UK employment figures out this morning, or lack of employment, I guess it is these days. Unemployment holding steady at 4.7% in the 3 months to June. Earnings pressures continuing to cool, though. Average earnings or overall pay, that growth fell to 4.6% on an annual basis. That's down from a prior 5% and the slowest pace since September of 2024. Regular pay, when you take bonuses out of that metric, rose by 5% on an annual basis over that period, which is unchanged from the pace seen in the month of May. Once again, though, we saw, and John Steveg at Bloomberg put this data out, so thank you to him for that, public sector earnings growth continues to massively outpace that in the private sector. I can't remember the exact figures, but I think public sector earnings growth in the UK is about 6%. Private sector earnings growth is about 4%. So I guess if you want a pay rise, then, become a civil servant and go on strike. That's the way to get things done. Sticking with the UK employment data, the HMRC's payrolls indicator, which takes data from PAYE returns, that pointed to employment having fallen by 8,000 in the month of July. That is the 6th straight monthly decline. And it also means that the UK economy in the 9 months since the budget last year has now shed jobs in 8 of those months. So thank you very much indeed, Rachel Reeves. And that's all from me for the time being, on that positive note.
Well, do you know what? The timing of you talking about Rachel Reeves was impeccable, because whilst you were talking about Rachel Reeves, I was watching a dog have a poop.
I thought you were going to
Yeah.
say she was in Croatia, but
Just,
that
I was
works.
watching Rachel Reeves having a poop. Anyway, quickly moving on. Michael, thank you for that. So let me just rattle through some overnight news headlines, courtesy of our dear friend Zach Eisman. Again, as always, I would say check out the Substack, but there is no Substack this week, so just follow him. Trade news, Trump posted on Truth, I have just signed an executive order that will extend the tariff suspension for China for another 90 days, yada, 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 as Michael alluded to, 90 days until the next 90 days. China issued a statement on US economic and trade ties in which China says will suspend tariffs for 90 days and will retain an additional 10% tariff rate. That's according to our friends at News Corp. China, again, as Michael said, they've urged companies to avoid the H20 processes, yada, yada, yada. Trump suggests he might allow NVIDIA to sell a scaled-down version of his next-generation advanced GPU chip called Blackwell in China. Sticking with China, Chinese refiners are asking for less oil from Saudi Arabia, with the drop possibly pointing to a reshuffle of global flows as more Russian crude becomes available. Now, on this could potentially be related to the fact that Russia won't be, or looking to China, India are looking to take on less Russian oil, because, as we know, Trump has really kicked off about that. So potentially India is giving signals to Russia saying, look, guys, the heat's on us now. We're going to take less from you. You need to find some other buyers. Potentially that's what's happening. But again, that's me speculating. Macro news, Trump said he was nominating EJ and Tony as the new BLS commissioner, as Michael was saying before, the budget magician. A plunge in UK employment showed some signs of easing in July, suggesting a shakeout in the jobs market since Labour ramped up taxes for businesses. Sorry, there's a lorry behind me. Maybe coming to an end. The 8,000 employees dropped was the smallest decline since January. But as our friend Viraj Patel noted, UK jobs data is all over the show at the moment, and I smell a rat somewhere. Moving further afield, yields on Argentinian government short-term notes soared to record highs on Monday, just 2 days before the Treasury faces an auction that will help gauge investor appetite ahead of crucial midterm elections in October. Definitely want to keep an eye on there. Geopolitical news, Philippines said it is, quote, seriously concerned with the dangerous manoeuvres of Chinese vessels this week and called out Beijing for its unlawful interference with a routine humanitarian operation. Just a reminder, this humanitarian operation basically means sending a naval ship to to a half-sunken other naval ship where a couple of poor Filipinos are based, and dropping off some food and water to them, just basically so they can claim this shoal for themselves. Finally, for me, in equity space, before I hand back to my dear friend Michael, SoftBank has selected investment banks to help organise a potential initial public offering in the United States for its Japanese payment app. Operator PayPay, according to Reuters. SoftBank Group shares jumped as much as 8% on Tuesday on bets that the tech investor would be able to capitalise on its year-long focus on artificial intelligence. So SoftBank all over the news this morning. And Spirit Airlines, they warned investors it may not survive. I think that was a given. I think we called that about 6 months ago. Basically, they can't raise cash quickly enough to satisfy creditors. So it's a bit of a crash landing for them.
Oh dear.
Well, so I don't even know why I bother. I just pale in insignificance to your punnery. And finally, for me, Sinclair Inc., one of the largest TV station owners in the US, they've begun a strategic review that could result in the sale or breakup of the company. And that's it from me. Back to you. I'm going to go and have a coffee and listen to your dulcet
Well,
tones.
so before I do get onto the day ahead, I've just got to mention this. I've just had a reply to me posting out this space, and I'll quote it. I read that first as pipsqueak, and now I feel bad. I think that's rather apt, actually, in terms of
Oh,
description of you.
to be fair, I think when my mum sees these, that's what she sees.
Probably.
Certainly your mum does.
Oh, God, here we go. Right, moving very swiftly on.
Plot twist. Plot twist. Guess who I'm on holiday with?
Oh, no. Oh, God.
Right,
Oh,
move on.
Jesus Christ. Yeah, moving very swiftly on from that. Where are we in terms of today then? Data, a couple of things of note on the docket today. At 10 o'clock this morning, we have the latest ZEW sentiment surveys out of Germany. The expectations metric, that is seen falling to 39.5 in August, down from a prior 52.7. The current situation figure, that's also expected to decline to minus 67 from a prior minus 50. 9.5. So, Ryan, that will make you very, very happy indeed. More dismal German figures. The main
Yeah.
highlight of the day, though, comes at 1:30 this afternoon in the form of the July US inflation report. Headline CPI, that's seen having risen by 0.2% on a month-on-month basis last month and by 2.8% on an annual basis. Core CPI, meanwhile, that's seen rising by 0.3% on the month and by 3% on the year. If we were to get annual rates of inflation in line with those consensus expectations, it would represent a 5-month high on both metrics. It would also represent the fourth straight month that inflation has been moving away from the Fed's 2% price target. And incidentally, John Hilsenrath, who used to write for the Wall Street Journal, saying yesterday that inflation has now been above the Federal Reserve's target for 52 months in a row. Although that, of course, won't stop the usual suspects running around saying that there is no inflation whatsoever. In terms of the release itself today, a lot of focus is going to fall on the core goods metric. Of course, that is where we will see potential signs of tariffs being passed through to consumers in the form of higher prices. Last time out in June, core goods prices rose by 0.7% on an annual basis. You might say that doesn't sound like a lot, but that was a 2-year high for that metric, and it's likely to move a lot higher in the months ahead. In terms of context around the data, money markets pricing around an 85% chance that the Fed deliver a 25 basis point cut in September, with the market also discounting around 57 basis points worth of easing by the end of the year. Of course, do remember, though, that even after today's data, we have another jobs report and another CPI report due before the next FOMC meeting in the middle of September. In terms of other bits and bobs on the docket today, we are due to hear from the Fed's Barkin and the Fed's Schmid, both of whom will be speaking for the first time since that July jobs report. And on the earnings front, after the close, we're due to hear from CoreWeave, who of course IPO'd recently, underpinned by Nvidia. But before the market open, the most important earnings release that the world has ever seen, 10:15 this morning London time, 5:15 on Wall Street. Pony
I
AI
know where this is
report their
going.
quarterly figures, and we'll
Yes!
see whether the stock falls at the first hurdle or gallops on higher.
Yes! Yay! Fantastic. What a way to end the show. I appreciate it, even if no one else did. Michael, thank you so much. Listeners, don't expect much from me this week. Pretty much the only things I'm doing are the blast with my dear friend Michael, my dear gorgeous friend Andy Setzer. Hello, Andy. And obviously Cam, gorgeous Cam, and the Outfix guys on Friday. But apart from that, I'll just be posting pictures of me getting absolutely sozzled. But yeah, whatever you're doing today, have a splendid day. Keep it tight. Stay safe. And myself and Michael will see you all tomorrow. Much love.
We will indeed. Bye for now, and I need to figure out how to get out of this space. So we could be here for another hour, but if
Right,
not, I'll
right,
speak to you in the morning.
right. I'm leaving. See you later.
Bye.